joining our February monthly webinar provided by the Mortgage Bankers Association of Memphis in conjunction with MGIC Mortgage Insurance Company. We've got Mara Phillips and Jeff Platfoot with us here, and they are going to be teaching us about the new URLA 1003 loan application that's going to roll out here soon. Whether we want it or don't want it, it's coming. And I know that many of your companies have probably already put you through some training. I know in particular, I was on this particular training yesterday with my company, and it is good, it is accurate, it teaches you what you need to know. And I hope that you have the ability to focus on this for a few minutes because, part of MBA's initiative is to educate our membership. And if you haven't had an opportunity to really actually close out your email and watch and learn about this application, it's going to be a rude awakening for you if you haven't really taken a training like this. So I encourage you to please listen. In addition to that, I would like to honor our sponsors that have taken their time, energy, effort, and money to support the MBA this year: Bancorp South, Mortgage, Home Surety Title, Independent Bank, Memphis Area Association of Realtors, and Evolve Mortgage, or Evolve Bank and Trust, I'm sorry. Those are our Home of the Blues sponsors. Bluff City sponsor level is MIG, Mortgage Investors Group, Orion Federal Credit Union, Lauren Haas Gilchrist Shelter Insurance. And our 901 sponsors, Fast Track Realty, of course, MGIC, Mosby Insurance, Regions Bank, and Trustmark. Your sponsorships are valuable to our association for many reasons, but mainly it's going to keep us afloat through this 2021 year, knowing the type of situation we were in 2020 with. Obviously, you can look at my background and tell I'm working from home. A lot of you may still be working from home also. We've got to be able to stay afloat to provide value to our members and advocate on Capitol Hill for our mortgage industry and be able to do all the things that the MBA does throughout the course of the year. We will have a virtual inaugural to install the new board members in March, and we'll have a new president, Katie Spake, along with other board members taking their next step up. So with that being said, I appreciate you all joining today. I'm going to turn over to Mara Phillips and Jeff Platfoot so that they can go through this training session, and I hope you have the ability to tune everything out and focus for a few minutes so that we can really get this down pat and it's not a surprise for us when it rolls out later on.
Thank you, Jeremy. Good morning, everyone, and thanks for joining us. I know you're all still slam busy, which is just amazing, but we're thankful, I know. Jeff Platfoot is our trainer today. He's one of MGIC's regional trainers, has been with MGIC a very long time, 20 plus 30 years, I don't know, a long time. And prior to that has experience in underwriting, so background in the mortgage business, so he understands what y'all are going through. Although this new 1003 is a little bit overwhelming just due to, we all know the number of pages it will go to, I feel like it's very intuitive. Very thankful it's not a paper application because that would be overwhelming, but it just flows through the website. Jeff's going to go through all of those changes with you, as well as comparing the sections to the previous one to give you a little better context. Like with any presentation, feel free to post questions, either open your mic and ask or put it in the chat, and we can address that as we go. It'll make it much more productive if everyone else can hear what you're wondering about as well. So I'm going to hand it over to Jeff.
Well, thank you very much. I appreciate it. I'm going to get rid of my screen here so I can not distract myself seeing me in the corner. And welcome. Thank you very much. We're just going to jump in because as Mara said, we totally get that you folks are extremely busy. So we will talk about this new residential loan application and when it's changing and why it's changing. And like Mara said, some of the differences that I really think stand out. And the biggest reason for why it's changing is because years ago, the Uniform Mortgage Data Process portal was created, and it was to create just that uniformity between all channels, whether it be credit union, banks, wholesale, retail, correspondent, whatever it might be. It was to create uniformity for all within the country. And it started out with the appraisal data set. And that's been around for several years. Then the closing data set came into play, and then the delivery data set. And you'll see each of these three all start with the word uniform. And that's really the consistent theme here. And the last piece to bring us full circle is the loan application data set. And this is going to affect everybody in the country. And it's been coming for quite a long time now. At least for a couple of years, this URLA it has been rolling out and then postponed. It was ready to go last, I don't know, March or so, but then they pushed it back because of COVID again. But it did go live in limited production this past August, a few months ago. And if you in your lending institution was ready to run with it on January 1st, a few weeks ago, you could have. But we all know March 1st is right around the corner, and March 1st, just in a few weeks, is when everybody, all lenders, must be utilizing the new loan application. And then next March 2022 is when the current old application will basically go away forever. I think if you step back and think about today's application, which has been around for decades, if you closed your eyes, you probably could see every field on that 1003 today. The borrower information's on the left-hand side, the co-borrower information's on the right-hand side, and we start walking through it. The biggest change, one of the biggest changes, is that the new application is a one borrower design. It captures only one borrower. So there will be additional documents that you may need to use if applicable. And as an example, and I'll show you here in a minute, is when you have more than one borrower. So you're also going to see a lot of hard stops throughout this application. So if something doesn't apply to you while you're taking the application with the borrower during the interview process, it doesn't apply to your borrower, we're just not going to skip over that. We are going to indicate that it does not apply. And then also throughout, there are drop-down boxes that have been included in the income area, the asset and liability areas. So I hope what that's going to do, and I do believe, I think in the long run, as Mara said, I've been in this business for about 33 years, and it's all been direct sales and underwriting. And I think what's going to happen in time, we will start to see more accurate, complete applications. And when I say accurate, when we talk about base, overtime, and bonus, we don't just put it all into base. We're going to make sure each piece is broken out separately, which is going to be a win-win in the long run, I think, because when we get our automated underwriting recommendations back, I think we're going to have more accurate recommendations, that the loan officer is going to see. So when it hits underwriting, the documentation requirements, those types of things are going to stay in place and not change so much. So I think turn time will improve also because of this. With regards to how it's going to benefit maybe the borrower, I don't know if it will. I think it's going to be very easy for the borrower to start the process just like they do today if they started on a website. We're all accustomed to working with drop-down boxes. We all know how that works. So, what we do is we live inside of this application every day, all day long. Prospective new borrowers don't. So for them, it's just another application to fill out. For us, there's going to be lots and lots of changes. I think of this new application as all of the information that you currently gather on today's application, all of that's going to be gathered on the new application, but it was like a deck of cards and they just shuffled it and everything's moved around. And then in some areas of the application, they have added questions, and I look at it as being more detailed, more robust, which again is going to be a benefit, in my opinion, in the long run, because underwriting will have that knowledge. And I'll explain to you and I'll show you that here in a second. But There's going to be a total, excuse me, a total of 5 components, 5 different pieces that you may need to use. The first one's the borrower information application, and then there's the lender piece. These 2 documents, components, are going to be required every time, the borrower piece and the lender piece. And when you have more than one borrower, we will grab the additional borrower document. So again, this is a one borrower format now. So many times we are going to need to obtain this additional borrower document. And then also they've created what's called an unmarried addendum. And then the last piece, again, there's 5 of them, is a continuation sheet. And the bottom 3 here are going to be required when applicable. So I'll explain to you more about that here as we go along. So what I would like to do, and we set aside, like 45 minutes today, is to give you some highlights of what you're going to see. So the borrower component, the borrower piece here, has 9 sections within it. It's a lot. And 8 and 9 down here at the bottom, demographics, HMDA information, loan originator information. We're not even going to touch on that today. It's what you're used to doing. You're already accustomed to completing the HMDA, also your name, your lending institution, your NMLS number, that type of thing. I just want to point out some big differences that will hopefully help you. This is what the first page of the new borrower component looks like. And the very first thing we do is ask for the borrower's name, and then social, date of birth. They move citizenship right here. And then the big thing that's very different for us all is whether or not, in this case, Peter Simon is applying for individual or joint credit. And if they were applying, or if he were applying for joint credit, he would then indicate that here and then tell us who the other borrower is and provide that name. Maybe there's 3 people that are buying this home. So we'd have Peter and then 2 additional names here on the right-hand side. So automatically, if there's joint credit with another person, we know right out of the gate, one of those optional documents are now applicable, and it's that additional borrower component. And again, I'm going to show you that here in a second. And folks, I'm not going through every one of these fields. We know what name is, social, birth date. I'm just trying to point out some of these differences that maybe we haven't seen before. We keep talking about Peter and personal information. They've added cell, email. Again, you'll see format. Might have a little different look and feel, but for the most part, the information that we're gathering is very similar to what we've done before. Address, those types of things. If our borrower has been at their address less than 2 years, we fill this out. If they've been at their address for more than 2 years, we're not going to just skip this. We're going to click on that does not apply button. So you'll see that as a common theme throughout the entire application. If my mailing address is the same, then we're going to click on does not apply. We're going to then move into section 1B and 1C, and it talks to us about employment. Most of this information is what you're already grabbing today. Where do you work? What do you do? What's the address, phone number, how long you've been there? You will see, though, that we now are capturing the income right here on the right-hand side. So the income here on the right is tied to this employment. If they had a part-time job or second job, they do the same thing here in the middle area. So very similar. They have added, though, a box that's brand new here in the middle that asks the borrower, that you're asking the borrower, if you're the loan officer in the interview, whether or not that your borrower is employed by a family member or maybe a realtor or the property seller. So is that employment arm's length or non-arm's length transaction? And again, this is awesome information for underwriting to know, because what happens right here is if they are employed by mom or dad or whomever it is, the realtor, we need to know that information. And then what's going to happen is we'll probably take some additional steps for documentation, due diligence, those types of things, since we don't have a disinterested third party as my employer. We've always asked whether or not our borrower's self-employed. We're going to do the same thing, but they have added the question here of whether or not your borrower owns more or less than 25% of the business. And if it's 25% or more, then we probably would then also capture, obtain business tax returns in addition to the personal returns. And then what you'll see is when you get ready to calculate that self-employed income, that is not going to go over here on the right. It's going to go in this little blue box where it says monthly income or loss. And this is where you're doing what you already do. You're going to probably have 2 years worth of tax returns. You're going to pull out your MGIC worksheet. You're going to calculate self-employed income or loss, whatever you come up with, and that's going to go right here in this box. As Mara mentioned, please, folks, if you have any questions, comments, take yourself off of mute, holler at me, or you can always use the chat box, but don't be shy. We've got this area here, talks to us about other income. Again, I think very similar to what we're used to seeing. Is my borrower receiving any, let's say, child support or alimony? Again, you'll start to see drop-down boxes built in here, which is a great feature. So then we can make sure we accurately grab the other income, because then our automated underwriting system is going to tell us what documentation they'd like to see if this is, alimony or child support. We move into, or again, you see that little box there, maybe this doesn't apply, and many times it doesn't. So we're not going to just skip over this. We're going to click on that does not apply box. We go over into assets and liabilities. And again, I think for the most part, this is pretty similar information to what you're gathering today. Assets, they have, again, added drop-down boxes here where we can appropriately pick whatever that asset type is. They have broken out into section 2B, other assets and credits. It's got its own little space here, maybe earnest money, proceeds from the sale of a home. So it's got its own little section, but what we're doing here is what we've always done. Again, I think very consistent to what we do today versus what we will be doing or required to do on March 1st. We move into the liabilities. Your credit report's going to populate in here similar to what it does today. You will have the ability to add, or potentially if you had to change or omit debts here. And again, there'd be a drop-down box available for you if you needed to do that. Over on the right-hand side, you'll see, let's say maybe you're doing a cash-out refinance, and maybe you want to pay some of these debts off with that cash-out refinance. You can indicate that right here. And the nice thing is this will now flow into your details of transaction. So I'll show you that here in a second, and I'll tie that together for you. But those boxes have been added. And then in 2D, again, similar to what we do today, borrowers, if you pay alimony or maybe pay child support, we could capture that right here with the payment amount. All right, let's let this excitement continue here. Let's talk a little bit about REO, real estate they own, real estate information. Maybe they don't own any real estate at all. Well, guess what? We're not going to just skip over that. There's a little box up there at the top that says, I do not own any real estate. If they do own real estate, again, the good news is although it looks a little different, the information we're grabbing here is nearly identical to what we've done in the past. What's the status? What's the occupancy? What's the PITIA payment? If this were a rental income producing property, we'd capture this over here on the right-hand side. You will see in a grayed out box here, this is going to allow for you to look at probably the tax returns and Schedule E that you look at inside the tax returns. And so we can pull out our MGIC calculator for rental properties and then figure out, like we do today, income or losses for that property. And then you would be inputting that, and it does now have its own space or spot right here. And then once you tie over or link over the mortgage from the liabilities, it will show right here. And if in this instance, it's my primary residence and I am selling this, you would also indicate that right here. So this debt's going to be paid off at closing, at or before closing. You're going to be able to put up to 3 properties in this section. Excuse me. And then, we all know there's folks with more than 3. So you will be able to open up an additional doc and be able to add additional properties if needed. Excuse me. Let's talk about loan and property information. This is section 4 here. And again, folks, this is the borrower component we're talking about. We haven't gotten to the other ones yet. This is all just the borrower piece. And what you'll see here, I look at this information and I think of today's application. This is really what's on the top of page 1. Loan amount, purpose, address, those types of things. Is it a primary residence or a second home? So information, but this piece now in section 4, this is probably about 3/4 of the way back in this borrower piece. So it's been really pushed back further in. Again, I used the, it's sort of like a deck of cards and I shuffled it. Well, we're going to stick this in section 4 is where this ended up. They have added 2 very good questions here. Again, I think this makes it so much more relevant and robust, whether or not this is a mixed-use property or manufactured home. And folks, if the answer is yes to either of these questions, it can change the whole loan. It could, if this is a mixed-use property or manufactured home, I got to first off make sure my loan program will even allow for either of those. I need to make sure that I potentially have the correct appraisal document if it's a manufactured home or mixed-use property. So good information, again, to have, knowledge to have when this information goes into underwriting or at time of application when you're having this discussion with your or interview with your prospective borrower. We move into 4B. This just talks about whether or not you have any other mortgages out there tied to this property and maybe they need to be subordinated. Maybe this does not apply to you. I use the example sometimes, maybe I'm doing a refinance and subordinating a second. Well, that second is a lien because I put a new pool in, or maybe it's a lien because I have solar panels. A lot of those types of examples and companies behind them will put a lien on that property. So of course we'd want to make sure that that was subordinated if need be. And then down here at the bottom, if your borrower were purchasing a primary residence and that primary residence is, it's a purchase only scenario. It could be a 2 to 4 unit primary, or it could be an investment. Maybe I'm buying a duplex. I want to live in half. It's my primary residence, and I want to rent out the other half. This is where the lender, if the program allows for it, we could capture that rental income from that other half. Maybe I'm buying an investment property, and I want to try to be able to make sure that I can use the income from that investment property to help qualify. Again, that would go right here. So purchase transaction, whether it be primary 2 to 4 or just a straight out investment, if your program allows for that income to be used, we're going to capture that right here, which is great to have this field because we didn't have that before. And then in 4D, we talk about gifts and grants. And I always tell folks, I'm not sure why this isn't with the asset section, but it's not. It's back in section 4D. What we've always captured in the past, whether or not there might be gifts or grants. What has been added is, have these gifts or grants been deposited or not deposited? Again, very important information to know because this helps us to understand what type of documentation we're going to need and potentially paper trail to evidence that gift or whatever it might be. So again, it helps us with that information up front. Again, I use the word robust. They've added this piece here. We move into the declaration, section 5. This looks very similar, all the yes, no questions that you've asked for years. But you'll notice the top half is very different, I think. We're talking about the property that the borrowers are buying and the money they're using. One of the things you'll notice here is if it's a purchase, are you purchasing this from a family family relationship or business affiliation, that type of thing. And if you think about that, we ask that same question about employment. Are you employed by a family business? Now we're saying, are you purchasing this home from maybe a family relationship? And if that answer is yes, again, we might have to make sure that our loan program allows for it. LTV requirements, all of those types of things can come into play. It adds right here whether or not your borrowers have applied for any new credit or will be applying for any new credit. So I think what you'll see here, especially in this area, but throughout the entire application, the questions that you ask during the interview process, if you're a loan officer, are going to stay the same, but in many cases, again, you're going to become more detailed. We're also going to dig a little bit deeper in the interview process, and we're going to capture this information here up front. Down at the bottom, that bottom half right here, I think this is very similar to what we do today. Are you a co-signer or maybe a party to a judgment or deed in lieu foreclosure, bankruptcy, something along that line. So this piece, the bottom half, is very similar to what we do today, or we ask today, I should say. And then down section 6, and we're almost done with this piece, is pre-canned, pre-typed information, acknowledgments, agreements, those types of things. Our borrower or our borrowers will sign and date down at the bottom here. Excuse me. And that, folks, is the borrower component. So this piece would be required every time, this borrower component. And then that leads us into the lender loan information piece. And this document's going to be required each time. The good news is this is much shorter, and it's very similar to what we already do. Again, things have been shuffled and moved around if you can't tell, but you'll see in the lender loan doc, the first thing it's going to do is, as you look at this information, it's very similar to what we see today. One thing they have added is the question with regards to whether or not this property is in a community property state, depending on where you're lending. Tennessee is not a part of that. Again, I don't know if you maybe go down into Louisiana or something along that lines, but be cautious of that. For most of you on this call, it won't involve you or impact you at all. The next section talks to us about title, which again, you're accustomed to doing. And they did add in the title section that if this were a leasehold, what's the expiration for the leasehold? And leaseholds aren't very common in the United States, but in some pockets of the country, they are very common. So again, usually where land is just really, really expensive. I always say Lake Tahoe, oceanfront, most of Hawaii leasehold. Some other party owns the land, you're just lending on the structure. So when your automated underwriting system sees leasehold, you are going to have several extra hoops to jump through, guidelines to make sure it's acceptable. But they did add that date here. As they added also information with regards to trust and whether or not this property is located on an Indian reservation. And if it is, how will title be held since it's within that reservation? So again, this could apply to you. It might not. It's just going to be dependent upon where you're lending at. This whole section right here, I think, is, again, pretty identical to what we're used to looking at. Conventional loans, types, terms, rates, the new PITIA payment will be shown to us right here. And then the last piece that you'll be involved with is within the lender piece is you finally are getting to the details of the transaction, and you're going to see that this looks just about identical to what you do today. They have added 2 areas here, and the first one is letter E, and I briefly mentioned this earlier, and this might be where if, again, you were doing a cash out refinance scenario, paying off some debts, I said whatever you're paying off here will then map over into your details, and that dollar amount would be here, which is a good feature. It's a nice feature to have. They've also broken out your credits between seller credits and other credits right here. So again, very, very similar to what we do today. And the look and feel of it is very similar to what we do today also. So that is the lender piece, the borrower piece, the lender piece. There are 5 total, so there's 2 of them. Those are the big ones. This one right here is called the optional continuation sheet. This is not a big one at all. That's good news. This is just, I need to add some more free form text, add some more to the story, whatever it might be. If you need to do that, we'll use this component again, if applicable and needed. One that is new to us is what's called the unmarried addendum. And an unmarried addendum is going to be completed by you, the lender, and it's going to be completed when the borrowers indicate unmarried and the state that the subject is located in requires that this document be completed. This would be completed whether or not talking about spouse, legal spouse, civil union, domestic partnership, those types of things. And then you would indicate it within that state right there. I don't know every state, folks. It's not real common with most states. What I would recommend is that you double check with your origination system provider internally to see whether or not your state falls into this scenario. Because if it does, when there's somebody filing joint that's unmarried, this could come into play and be a factor. For most folks throughout the country, this document's not going to be needed because it won't be required by the state. The last piece that we're going to talk about today is the document called additional borrowers. Because remember, this is a new one borrower form. So we all know you're going to work with more than one borrower. You're going to have borrowers that have joint information, 2 borrowers that have separate information. You might have 3 or more borrowers, and that's all fine. Just like it is today, it's all fine with the new application. But what will happen is, and I'm just going to change my scenario a little bit. If I go back to the very beginning where we started our discussion today on the borrower piece, I said it starts out with name, social, date of birth. If Peter tells me I'm filing for joint credit, you'll see Peter's going to tell me that there's 2 total borrowers, himself and this other borrower, and the name would be listed here, Elizabeth. So again, when I see this at the very beginning of our process, I know the additional borrower document is going to be applicable and is going to need to be filled out. So then the question we get is, so you're telling me Elizabeth's going to have to refill out this same application? And the answer is yes and no. And what I mean by that, and I did mean that sarcastically, although it is Friday and it's cold. But anyways, if your assets and liabilities, real estate, that type of information is joint between Elizabeth and Peter, Elizabeth can indicate that right here with Peter's name saying it's joint information. And then we're done. You're going to capture her employment information if that is applicable. If you have certain sections where they are joint or some areas of this, maybe assets are joint, but real estate is not, or vice versa, something along that line, then this section would be opened up and we would complete the extra piece just for Elizabeth. So again, I think interview process wise, as we're having this discussion with, in this scenario, Peter and Elizabeth, we're probably going to need to ask more detailed information at point of sale, time of application, to say, hey, you mentioned ABC bank account, which is checking and savings. Is that joint, or is that just in your name, Peter? Is that just in your name, Elizabeth? So we're going to know where to appropriately put that if they're not joint. If they are joint, they're just going to go under Peter on that first form. So again, I do believe your process and how in-depth your interview questions are with the borrower will become more detailed, again, in my opinion. So I'm going to stop right there. I've just been yakking away, talking away. It's 10:36. We have until about 10:45 that we set aside today. So we've got a few minutes because we have covered what I wanted to cover, but I want to see if you folks have any questions or comments. I want to, take yourself off of mute or use that chat box, whatever's easiest for you, and throw them out there to us. All right.
Jeff, did you mention how many pages it's going to be?
I did not. Is everybody sitting down? All right, everybody, if I had everybody on camera right now, I would see a similar facial expression and it would not be a good one. So the borrower and lender component required every time, that's going to be 11 pages. So you're always working with an 11-page document each time. Yeah, see, there you go, Jeremy. I know. The good news is I tell folks, at least they're not legal size. At least there's whatever, 8 by 10 or 8 by 11. If you have to use all of the components, the unmarried doc, the additional doc, additional borrower doc, or maybe the comment piece, if you used all of those, it's 17 pages long. So, yeah. That's Mara's fault because she asked the question. Everybody was in a good mood. It was Friday, and now I say 17 pages, and they're looking at me like, okay, I know. I'm just the messenger. I'm not the creator. I'm the messenger. So.
Well, you're a good messenger, Jeff, and we appreciate you breaking that down for us. I saw kind of who was on the call today, and I see some names on there that we don't usually get at our regular membership meetings. So I appreciate all of you guys joining, and hopefully this benefited you. Like I said, I know your companies may have been training you on this, and when you're busy during the day, you might not have had an opportunity to really focus on it, but hopefully you did here today. Maura, do you have anything that you want to close out with before I kind of wrap it up?
Yeah, I did have one other question that some people have been asking me. Is the 1008 also going to change? And I also heard maybe some of the information from the 1008 will be included on the 1003.
Yes, no, and maybe. Next question. Now,
we don't know.
It is Friday, and I'm like a little, no, there's still going to be a 1008 transmittal. It is going to be changed. They've talked about it, but to my knowledge, haven't changed anything. So we're going to use the same 1008 transmittal right now. In the future, it's going to be revised. So what is that, 1 page now? So it'll probably be 13 pages in the future. I know, it's an exaggeration. But there's still a 1008 transmittal. Discussions about a new one being revised. But I think the thought process from what I read was, let's first let everybody get their arms around the new URLA before we go and change that next piece, that type of thing. So
thank you.
One other question. Jeremy. When you say they are going to change it, who's they?
Oh, I don't know who they is.
Somebody behind the curtain.
Yeah.
Is it MGIC? Is it really?
No, it's not MGIC. Fannie, Freddie, FHA, VA, input.
FHFA probably.
Yeah.
Probably FIFA.
Oh yeah. The they, I think, is pretty broad. I mean, gotcha. You're right. I shouldn't say they. All of this started, and I started today, uniform mortgage data information and these pieces that have started. And that was a collaborative between all those different folks. So FHA and Fannie, conventional, Freddie, whether it's insured or not insured, the data that's running through for appraisal information, it's universal between all the channels. So long-winded answer for they.
Gotcha.
Thank you. And two quick things.
It's a great question.
2 quick things. Am I correct that if you have like a plain vanilla loan, one borrower, single family, primary residence, say no rental property, just pretty plain, that if you say not applicable, the next field won't open, right? So if you say yes, then it's going to open it up to answer more. If you say no, then it could be a much shorter application. Is that how the number of pages works?
I think it's going to depend on your origination system.
Yeah, I would think.
I think your origination system. So maybe, I don't know, you use one of the common ones out there. I don't know about Encompass or Bytes or whomever it is. Maybe it would shrink that up to where it's not 11 pages. But I don't know that answer. So it's going to be, I think what would happen is if you printed it out, it might print all of the information out because we need to clearly see the does not apply button. So again, I would say that is an internal, depending on your origination system. And then each one of those origination systems can be tailored specifically for you and your shop, you and your lending institution. They can be tailored and, reconfigured and mapped differently across the board for everybody. So let's say a better way to put that is, if I were taking a paper application, I think it's going to print out 11, and that's what we would fill out. So again, it's going to, I believe, depend on where you're at.
Thank you. So, Jerry, I'll wrap up and hand it over to you. I just want to thank everybody for your time today, and I'm sure you found this valuable. We can get those slides out to Caitlin to send out to everybody if you would like the PDF of it. And wanted to thank you for your business also. We offer these type of value add services as an additional way to earn your business. So please keep us in the mix. If you've gotten in a rut on quoting somebody else all the time, please keep us in the mix. I think you'll find that our premiums are very competitive right now. Call me if you have any questions or need some help running scenarios. I'm happy to help you. Sitting at home, I have all the time in the world. I can help anytime. Thanks, everybody.
Fran, I saw your comment. We'll be sure to get the slide deck out to everybody and get a copy of all this stuff out there. I downloaded a copy of it yesterday also. So once again, I want to reiterate, on March 4th, I think yesterday or earlier before this started, I spoke about our virtual installation. I didn't give you a date, but that date is March 4th, and we'll be swearing in the new board of directors. Katie Spake will be taking over as president of the Memphis Mortgage Bankers Association. This is something that usually happens in January of each year. You all know that we get together, have a really nice dinner and a fun night, pass the gavel around and do our swearing in. Everybody gets all dressed up and has good drinks and good food. And unfortunately, we have not been able to do that this year. We do fully intend on having some type of party to honor the new board later in the year. But our bylaws direct us to transition I joke about the peaceful transition of power between me and Katie. So we have to do that by March. So we'll have a virtual installation March 4th. So be on the lookout. And then you can watch the swearing in if you'd like to. There'll be an invite that comes out to all of our membership. We're also going to have members receive an email next week for a board meeting, not a board meeting, but a membership meeting that we're going to have. We're going to vote on some critical changes to our bylaws, changing the structure of the board and adding in some verbiage. I think our bylaws for the Memphis Mortgage Bankers Association were created in 1988, and then they were updated last in like the early 90s, 91 or 92. There's some modernization that's required, and we're going to send out a link to anybody who is a member so that they can vote on that change. Also, I mentioned earlier our sponsors, and sponsorships are still available. We're going to try and have some critical programming throughout the course of this year. The Tennessee State Mortgage Bankers Association is now trained to do the SAFE Act classes. And so for those of you that are at non-bank lenders and required to do that, long training, TMBA is going to be able to come directly to Memphis and hold that training. Mortgage Bankers Association, Great Rivers, which is usually in April every year at the Peabody in Memphis, has been pushed back. You're probably starting to receive some of that information now also. Be on the lookout. I'd like you to register. Hopefully we can pull it off and have good membership show up from Memphis. I know that it includes Mississippi, Arkansas, Missouri, and Tennessee, but we want to represent our city when they're here in our city, because we don't know how long they'll be here. They may want to move it to Nashville one day. So let's represent and sign up for that. And also, renewals for your membership are open on the website. So if you go to www.memphismba.org, then you can either renew your membership, sign up for membership if you're not a member, or obviously you may sponsor as well. But we're going to try to provide programming, like I said, throughout the course of this year. Hopefully when we get to warmer months and maybe we see some light at the end of the tunnel with in-person meetings, we can have some outdoor events or socially distanced events. Keep it safe for everybody, but I miss seeing everybody's faces. I miss being around people. So hopefully we can get to it, Thank you again for joining. Thanks, Jeff. Thanks, Mara, for doing the class. And y'all have a wonderful Friday and a great weekend.